Hey, what's going on, Cashflow Hackers? It's Chris with Life 180, and today I am interviewing good buddy Sebastian Boyer, the approved guy. Now, last video, Sebastian and I talked about, well, last video I did with him, I should say, we talked a lot about how to start your business, how to manage business credit, the steps that you need to take to set up your business to actually have it set up to be able to take advantage of all the financial benefits of actually owning a business, which I think is a really, really big deal. And it's one of the reasons that Sebastian and I kind of got together and decided that, man, this hole goes really deep, right? Like to figure out like all the different layers of this. And so today I'm bringing Sebastian back, and we're going to be talking about the SBA. What is it? Who can take advantage of it? How do you take advantage of it? What's going on with the changes of the SBA and how that could possibly impact you? And there's a lot of different ranges, whether you're a small entrepreneur, whether you're a larger small business with higher revenue. These changes are going to have an impact on you. So you're going to want to make sure to stick around and gobble up all the information. So I'm excited to bring him in. So Sebastian, what's up, man?
Hey, hi Chris, how are you?
Thanks for coming back. This is a
Yeah,
lot
thanks
of
for
fun.
having me again.
You got it. Well, you're awesome, man. You just last video I was blown away by the wealth of information that you passed out, and I feel like we should probably charge for these videos, but let's just give them away for free, right? So,
Yeah, amen.
um, so hey, man, let's talk about the SBA today. I know you and I have been talking about it a little bit off camera, but there's a lot of changes going on with the SBA. You were talking about October 1st that there were some significant changes. So I think that'd be kind of a good place to start. Can you kind of cover some of the changes in the SBA and how that's going to impact small business owners in the United States?
Yeah, certainly. So first, for those that don't know, the SBA is Small Business Administration, right? It's a branch of the government,
Yeah.
and they created a system for the banks to be able to get a refund between 75 to 90% of the loan that the bank issues. So what happens is the bank is the one that's issuing the money. They're the one lending the money up front, and then they have to take that loan that's been packaged, submit it to the government, to the SBA, to get their refund on that loan. If it's not packaged properly, if it's if anything's missing, they might not get that refund. And if they do it mess up more than one or a few times, they could lose that relationship. So that's why the banks are very strict with these SBA loans and how it's and the packaging and the diligence, background check, any affiliation that you have with any other businesses or anything in your past, it's going to be a part of their inspection on whether or not they're going to approve you for the loan. So if you got a traffic ticket a couple years ago, they're going to ask you about it. You're probably going to have to document it and explain what
Wow.
happened just for documentation purposes. Because why? Because they have to document it with the government. Does that make sense?
Wow.
Yeah. So it's
That's
very invasive, but it's well worth it because the term on an SBA 7A loan, which is the
yeah.
most popular loan,
Yep.
it goes up to 10 years, right?
Wow.
So it could be a 10-year term. Um, Historically, the rate on the SBA loan for forever now has
Yeah.
been prime plus 2.75%. So the prime rate fluctuates inside the SBA loan, and that can change quarterly in the loan,
Okay.
right? And
Yeah.
then the max that the bank could charge as a fee above prime would be 2.75. Okay.
Okay.
Now
Yep.
this was great. Before COVID, the prime rate was what 3.25, and
Yeah.
now I think we're at 6.5 on the prime right now. Yeah. So
Well,
the
that
prime rate,
inflation.
it hurts, right? But guess what? It is going to go back down eventually, and so the
Yep.
cost of that's going to go down.
Yeah.
So the problem, unfortunately, is with these SBA loans, when the bank has a choice to write a loan at, let's say, 50,000, 100,000, 150,000, or a million, or 5 million, and the rate is the same for them. Their revenue on that 2.75, right,
Yeah.
is the same. Which one would you choose? Would you choose the $100,000 loan, or would
No,
you choose the $1 million loan for the
no,
same
I'm
amount
taking
of
a
work?
$1 million. Yeah, I'm taking the $1 million one every time.
Exactly. So what that
Yeah.
does, unfortunately, is it kind of forces the banks because they can decide. At the end of the day, it's their money. So
Hmm.
when you talk to 10 different banks, you're going to get 10 different stories, right? And
Got it.
that's where the confusion lies. You might talk to the wrong bank who declines you and they tell you you're not qualified for SBA, but the truth is you're just talking to the wrong bank.
The truth is, they just don't want to deal with you.
They just don't want to deal with you, right? But now you give up. You think, oh, I don't qualify,
Oh,
and
yeah.
instead of trying again, you just say, well, I'm not qualified.
So what you're saying is like with these new changes in fees and rates and all these different things, what it's going to open up is ultimately it's going to kind of level the playing field for banks to be interested in opening it up to smaller businesses, entrepreneurs, which I think is amazing because America was built on the backs of small businesses and entrepreneurs that earn anywhere between $50,000 and $500,000 a year, right? So like
Exactly.
which I think is the spirit of what these types of loans should be. And my like, I mean, I don't want to like inject my beliefs in this too much, but like if the government is backing these loans, and that means like taxpayers are backing it, and so like to me, it should be the small businesses of Americans that are looking to start that should be able to take advantage of these the most. So this kind of in my like, at least from my perspective, it kind of puts the SBA loans back in the spirit of what they were created for in the first place.
It does. Now, with that said, the change does mean increased rates. The cost of the loan goes
Sure.
up. But my opinion, and you tell me if I'm a business owner looking for $150,000, $200,000, $50,000 loan, um,
Yep.
if it was not available before at 2.75, but I can get it now at 6%, even though it's more expensive, at least I have access to the money.
Yeah, I mean, I think you're right, and I think, yeah, you have access to the money, and think about it this way: lending is all a function of risk, right? Like
Right.
these banks and the government, they have to assess where is the risk, and so the reality is, the bigger you are as a business, if you've gotten to the place where you qualify for bigger loans, that means you're a little more financially solvent, and so therefore, typically speaking, the risk to the lenders are going to be less.
Right.
It's kind of like I mean, it's kind of like it's no different than personal credit in a way. I mean, I
Yeah.
know it functions differently, but the better your credit is, the more income you have, the lower your debt to income ratio is, the better your rates are going to be, right? So when you're a startup business, we all know the failure rate and the how hard it is to launch a business. So it only makes sense that fees are going to be higher. It only makes sense they're going to cost a little more for smaller businesses because there's more risk.
Yeah, that's right. So, and then the other thing is, when when you're getting a loan for your
Mhm.
business, it's different than getting a mortgage, right?
Yeah,
Because the mortgage is not giving you a return on investment, at least not right away, right?
yeah,
That business, you could quadruple that investment in a year, right?
that's yeah,
So you're actually seeing a return and it's growing. So we all are very rate and interest rate sensitive,
yeah.
but especially when we're looking at our businesses, there's a bigger picture than the interest rate, right?
Oh, for
So
sure.
that's where if you're looking at an SBA loan, you can't just apply blindly. You have to have a business plan. You have to have. So I'm going to go over that. But first, let me kind of just list these rates here. So,
Yeah,
so again, historically, the rates were prime plus 2.75, regardless of the loan size.
okay.
Now, the rates are if the loan is $50,000 or less,
Yep.
it'll be prime plus 6.5%.
Wow, that's crazy.
And let me also say before I continue with the rates that it is at the discretion of the bank, so they don't have to go up. It's up to 6.5%. So they don't have
Oh,
to charge 6.5%. They just have the liberty to do so. So they could very
okay.
well still charge 2.75 or 4%, but they have for loans $50,000 or less, they have the liberty to charge up to 6.5%. 50,001 to 250,000, it's at 6%. That's the max that they can charge.
Okay.
250,001 to 350,000, the max is 4.5.
Okay.
And then from 350,001 up to 5 million, which is the maximum SBA 7A loan, it's
Yeah.
going to be 3%.
So they've gone up a little bit. So they could charge less than that though,
They
and
can.
that's all up to the bank.
It's up to
And
the
so this
bank.
create more of a competitive environment for banks rather than it just be like, do they want to take the loan or not?
Exactly. And it's going to incentivize them to start offering smaller loans. And I've already seen it. Two of the banks that I've worked with for years who
Yeah.
traditionally never offered small loans are now
Yeah.
offering $25,000 and $50,000 loans where that was not even an option before.
That's
So
awesome.
I get calls all the time. People are like, "Oh, I want to get an SBA Express loan for 25 and 50,000," and I'm like, "Well, unfortunately, I don't have any banks that offer that. Even though, if you go to
Yeah.
the SBA website, they talk about it, it's promoted, but
Yeah.
find a bank that offers it, it's another story, right?
Nobody wanted to do it, and now
Nobody
they
wanted to do it.
be willing to.
So I believe this is going to change that. We're going to start to see more banks offering smaller loans, which is going to help smaller businesses to get access to funding.
Love it.
And so that's one thing. Now, to counter the rate increase, the SBA has reduced the fees that they can charge inside the loan. So there is a counter to this, which is also great. This just was released October 1st, and this is going to be in place until September 30th of 2023. Basically, for loans 500,000 or less, there are no fees, zero fees.
Wow.
For loans from 500,001 to 700,000, it'll be 0.55% of the guaranteed portion of the loan. Yeah.
Okay.
For loans from 700,001 to 1 million, it'll be 1.05% of the guaranteed portion of the loan.
Okay.
For loans from $1,001 to 5 million, it'll be 3.5% of the guaranteed portion, up to 1 million plus 3.75% of the guaranteed portion over 1 million. Okay. So yeah, so that might not mean a lot to you if you've never looked at SBA loans, but at the end of the day, they're trying to counter the rate increases by reducing the fees, and so they're trying to help incentivize the consumer or the business owner or an entrepreneur to say yes to these loans, because if they can get this money in the hands of these small businesses, then the situation that we're in now is not going to last very long.
It's kind of the equivalent of like what it would look like if they reduce closing costs on houses for single family homes, right? Like that's all they did is they reduced the closing costs of the loan.
So you can't help what's going on right now with inflation. Interest rates are going up, but if you can cut some of the fees, that can incentivize more people to say yes to these loans, which is going to stimulate their business growth, hire more people, stimulate our economy, get us back on track so we can get out of this recession that we're getting into.
I love it.
Yeah. So SBA is there for a purpose. They're trying to do what they're set out to do, which is to help small businesses and to grow the U.S. economy.
Help you get through the challenges that are coming.
Hey man, listen, they came out with the PPP loan that saved the day, right?
Yep.
They came out with the EIDL loan that saved the day. So you have to at least give them credit that they're trying to provide solutions to small businesses. Regardless of what your opinion is, if they didn't do those things, we'd be in a heck of a lot more trouble than we are now.
A lot of people would be feeling the pain a lot more than they did.
For sure.
Yep. A lot more, for sure. Yeah, absolutely. Cool.
So go ahead.
No, so you mentioned something, and I want to circle back to this about investing in different ways, different ways to utilize your SBA loan. Are you able? So if I were to take a loan for like an SBA loan for myself, let's say I wanted to go out and take the SBA and utilize it to buy like a commercial property or something like that for myself. Am I able to utilize it for that, or like are there limitations on what I can use the money for that I get the SBA loan? Does that make sense?
Yes, it does make sense. And so the 7A loan is really more designed for working capital, equipment. You can use it for payroll. You can use it for expansion, business acquisition. If you're starting a new business, sky's really the limit for the use on a 7A loan. But for commercial property, then it would be the 504 loan. And those go up to 25-year terms. And depending on the bank, it could go up to 25 million on those loans. Okay. Now, the caveat is they don't allow you to use SBA loans for any type of passive business or investment type business. Right.
Okay.
So what that
So
means
it's got
is,
to be working. It's got to be like a warehouse that you're actually utilizing and functioning. Like,
so the rule is 51% owner occupied.
okay. All
Right.
right.
So if you want to buy a $20 million building, you're going to need to occupy 50% of 51% of that
Okay.
space. The rest of it could be rented out, which could definitely cover all the costs. Right.
Yeah. Yeah. I was gonna say that could cover your mortgage easy. So you're based. That's solid.
Yeah. But it's not, it's if they got the feeling that you were looking to really just use this as an investment asset, that you weren't really going to use it for your business, then they're going to reject the loan. It's really meant for your business. Again, why? Because your business is going to create jobs. So it's not just
Mm-hmm.
about your business, it's about the jobs that your business creates, right? So let me give you an
Got it.
example. On the SBA 7A side, okay?
Mm-hmm.
I'll give you two examples. If you're a hair salon, right, or a
Mm-hmm.
barbershop, and as a barbershop owner, you have employees that you pay payroll
Mm-hmm.
to sit and use your chairs. Let's say you have
Yeah.
20 chairs, right?
Yeah.
But then another barbershop, their model is they rent those chairs out,
Okay.
okay? Which a lot of barbershops do that. So the
Totally.
barbershop or hair salon that has employees that they pay that use those chairs can qualify. The one who rents out the chairs
Won't
cannot.
qualify.
Cannot.
Uh,
Here's another scenario. If you're a real estate developer, right, and
Yep.
you're looking for money, the revenue for your company is based on the sale of those real estate properties, assets.
Mm-hmm.
So you won't be able to get an SBA loan.
Got it.
But the contractor that you hired to build the properties, he can get an
Good.
SBA loan.
That's interesting. That's
Why?
interesting.
Because his revenue is not directly related to the sale of the property,
Right. And he's creating jobs out of it.
and he's creating jobs out of it.
Yeah. Yeah.
You
I
understand?
mean, it all revolves around creating job creation.
Job
Really is
creation,
the
correct?
part there,
Yeah,
right. And so,
exactly.
so on the commercial real estate side, what loan did you call that? It wasn't a 7A loan. It was a 77
That's a
something.
504.
A 504. Sorry. What? Okay.
Mhm.
So a 504 loan, and they can do up to 25 years. With that loan, is that like a similar qualification process to like a mortgage? Like what's like,
So they're both going to be similar, actually, right? In terms of what they look at, except
okay.
when you're looking for an SBA loan, when you go to apply for a mortgage, you go and the mortgage lender or broker tells you this is what you qualify for. Now you go find that property and you shop, right? Or you
Mhm.
go shopping with your approval, right? In an SBA environment, you have to go to the bank knowing exactly what you want to do with the money. You need to
Yeah.
tell them, here's what I want to do, here's what it's going to cost me, here's my income, my revenue, my assets, and then they're going to look to see if you qualify for that project.
So you really need to have a business plan for even the property, because
Yeah.
that fit. How does that building or property fit into your business plan? How are you going to leverage it? How is it
Correct.
going to be an investment? How is it going to help you hire more jobs and expand and do all this stuff? So, so you really, it's the opposite. You go find the property, you build a business plan around it, then you submit for the loan.
Correct. Exactly.
Sounds
So
like a
with that said, the business plan has to have a detailed breakdown of your use of funds. It has to
Yeah.
have at least 2 to 3 years projections. These are some of the basic things that when I'm working with a client, I have them put together so I can present their case to a bank.
Okay.
The business plan, projections, the SBA financial statement, personal financial statement,
Mhm.
because they're going to be looking at your assets. What do you have available liquid wise? You have to anticipate at least 10% equity injection, which is a deposit into the loan, and at least 6 to 12 months post closing liquidity.
Wow.
Now that can fluctuate per
Mhm.
bank. I've seen loans close where the equity injection or the deposit requirement was only 2%. I've also had banks tell me 40%.
Oh my.
And the client was like, well, if I had 40%, I wouldn't need the loan. And my answer was, well, yeah, you still would, because you'd be missing the other 60.
I was
But
going to say 60%.
yeah, but I get it. I understand the client's, perspective, which is I don't have 40%. But that was that bank's call. That was, their judgment. Another bank funded that same client with 20% down,
Got it.
right? But the standard general rule of thumb is 10% is
Okay.
what they look for, and 6 to 12 months post closing liquidity. They are required on loans up to 350,000 to take any available real estate collateral.
Okay.
Yeah. So, looking at assets, equity, it could be your primary residence. They're going to put a second mortgage lien on it. So,
Okay.
it's not going to.
So you're personally guaranteeing it. Is
You
what
are
you're
no.
saying.
The SBA loans are personally guaranteed. Yes.
Okay.
Yeah.
All right.
Having
Okay.
business credit does help though, because they have a SBA score. It's called the SBSS score.
Okay.
That if you don't have the minimum business score, the SBSS score,
Yeah.
you won't qualify. So if you have
Okay.
excellent personal credit, your SBSS scores may be high enough because your personal credit might be pulling it up.
It boosts it.
But
Okay.
if you don't have, if you're kind of just average personal credit, you may need to
Hmm.
build up some business credit to lift up that score to qualify.
When you say average credit, what's average credit in that
I'd say
world?
700 to 750.
Okay. All
Yeah.
right. Cool.
Excellent being
So
780 to 800 or higher.
okay. Cool. No, that's awesome. So if you were a it's looking to start a business, because one of the statistics you told me before we hopped on here, and I gotta go here because it shocked me actually,
Yeah.
is that pre-pandemic there were about 4 million new businesses starting every year, and now there's 6 million starting
6
every
million.
year, and so that's huge. That's a 50% increase.
Right.
And what we talked about, and it makes sense from the context of the people. And I actually did a video on this like maybe 2 weeks ago. Is like your greatest financial need right now is more income,
Right.
and like so people are realizing like I need to do something right to
Mm-hmm.
to to kind of fill that gap. And so this is in a way, these changes that you're speaking to since October 1st are a way to kind of fill that gap and to help those people that increase demand at the smaller business level, the new business startup level, get going. And if they do everything and follow your coaching and your guidance and everything that we've been talking about, and that they can get in your programs or whatever, that's ultimately they can take advantage of that. Now, I'm going to put a question on you now. If you were to start a business, I don't know, in the past 6 months, or you're looking to start a business, how are you leveraging the SBA? Like, what are you doing to make sure you're taking full advantage of these programs so you can maximize everything?
Certainly. So number one, I would say don't quit your job.
Okay, fair enough.
Seriously, they're going to ask, "Are you employed?" And if you're
Yep.
not, chances are they're not going to want to fund you because they
Okay.
want to know that you have income coming in while you start to launch this business.
That sounds counterintuitive, doesn't it?
It
Like they
does.
own you a lot of money on a business, knowing that you got it, knowing that it's a side hustle, knowing that you got this other obligation and time commitment that's going to pull away from your ability to be successful in the business. That's what they're requiring.
So you're probably going to need to have, a manager or someone in place that's going to be able to help you run the day-to-day operations as you start if you're going to
Okay.
use an SBA loan,
Yeah.
because they don't want to, lend you. And I'll say this with a caveat because it depends on your liquid net worth, right? So if you have, $1 million in savings, well, fine, you can live off of that for a good amount of time while you launch
Sure.
the business. Pay your personal expenses and the business expenses. But if you're kind of, living check to check day to day and you've saved up enough money for the down payment and you meet the requirements, but you're just kind of there, you're going to need
Right.
that income, especially as you start first to get started. It's going to take at least 6 months to a year for your business
Yeah.
to really start to generate revenue and, start showing your return on investment. And then you can eventually leave that job. So that would be the first thing is don't quit the job until you start the business and have a strategy of transferring from being a employee to an owner. You're going to
Hmm.
need to have at least one person involved as a team member that's going to be able to help you to do that most likely, right?
Hmm.
Number one. Number two, you're going to need to have that 10% minimum equity injection. I will tell you, if you're like a mom and pop startup, it's probably going to be a little more, maybe 20%,
Okay.
right?
Fair enough.
In my experience, yeah.
Yep.
But if you're going to purchase an existing business, they love that. If it's an
Okay.
acquisition,
Okay.
okay? So instead of trying to start something new, go look for an existing business, something that's successful. They're not going to fund a sinking ship either.
Which, by the way, right now there are so much opportunity to acquire existing businesses with all the boomers retiring. With there's so many profitable businesses right now where people don't have succession plans, continuity plans, and so they're closing down profitable businesses because they're hitting health. My brother right now, just to give you an idea, actually, I got to connect you with my brother. He's actually looking to get an SBA loan. So he's buying a dog grooming shop, right?
Mm-hmm.
The person who owned the dog grooming shop forever came on health issues and now can't run it,
Yeah,
right? And so it's a super productive, profitable business. They
great.
just can't run it
They
anymore. So
love
my
it.
brother was there, they had no continuity plan, and they're able to come in and get this business like at a discount
Yep.
effectively. You know what I mean?
You're going to find a lot of, if you look for it, you're going to find it
Yeah, opportunities like that all over the
all
place.
over the place. And those are great because it's already a well tuned machine generating revenue. You're simply
Yep.
buying it. Don't try to reinvent the wheel. Just
Yep.
take it over, allow it to continue to generate revenue before you start
Yeah.
making
Yeah.
any major changes.
Yeah.
Um, so I tell you that's something. Also, franchises. They do like franchises, but they have to be proven franchise concepts that are already on the SBA franchise list. There's a
Okay.
list that they have, um,
Yep.
and um, and so new emerging franchises are more or less the same for them as like a mom and pop, right?
It's a risk.
It's a lot riskier, but a successful franchise that has proven track record of franchisees taking SBA loans, using them well, and then they've proven themselves. They like funding those because
That's
they
cool.
have a much higher chance of success because there's a system in place. You have mentoring, you have coaching from the franchisor, and
Hmm.
so therefore your chances of success is very high. Just as purchasing or acquiring an existing business, the chances are a lot higher.
Love
Um,
it.
so the problem is, like I said before, if you talk to 10 different banks, you're going to get 10 different stories. As a startup, if you go to the big three, Bank of America, Chase, Wells Fargo, and you're a
Hmm.
startup, they're
Hmm.
just going to tell you, sorry, come back in 2 years. And again, a lot of people, their hopes and their dreams die in the parking lot of these banks.
Totally.
Okay. And so the
That's,
thing is, you're just talking to the wrong bank,
uh,
right?
yeah. Yeah.
If you had known better, and unfortunately, it's the way they say it a lot. They don't say you don't qualify for SBA with our bank. They just say
Mm.
you don't qualify for SBA.
So I don't know this or not. I don't know the answer to this. So it may sound like a tee up question for everybody, but this is genuine question. Is this something you do like for your clients as far as like your relationships with different banks? Like, because if I were to go to go to Chase Bank down the street or US Bank or one of the banks that could get me an SBA loan and ask them, hey, do I qualify? If they go no, instead of going to them, could I go to you and say, hey, Sebastian, this is my situation. This is what I'm looking to do. I and utilize your expertise to evaluate my situation and find the different banks and kind of like broke it for me.
That's exactly what we do. Yeah. So my company OrangeFi, we're a business finance consulting and procurement service.
Cool.
Um, the business credit we talked about before is a division of OrangeFi.
Yes.
So on the OrangeFi side, when you come to us, we're going to start with a personal credit assessment. And then
Yep.
if we're going to go down the SBA path, I'm going to gather your personal financial statement. I'm going to do a very in-depth interview with you. Make sure you're going to be able to cover the equity injection, the deposit requirement. Look at your assets and your net worth. Make sure you have a business plan. I have a business plan software that I recommend to folks. It's called Life Plan. It's $15 a month, and it helps you put
Hmm.
together a professional SBA business plan with projections. So everything that you need is right, in place step by step. I try to make it as easy as possible so that we can
Hmm.
package the loan and I can share it with my bank partners that I work with. So the lenders and the banks that I work with, first of all, they're all preferred SBA lenders. Okay.
Okay. That's
All that
cool.
means is that they don't have to ask SBA if they can approve the loan. They have a preferred status, which means that they can approve it themselves and then
Mm-hmm.
submit it for their refund later, right?
Got it.
If you're not a preferred SBA lender, then you can't as a bank approve the loan. You have to submit it to the SBA to get the approval, which makes it take
Okay.
longer, right?
Got it.
So it just gives them the authority to approve it and fund you faster. Okay.
Yep.
And so all of the banks that I work with are preferred lenders. They service nationwide USA. All of the banks I work with are going to fund startups. Now, some of them don't like certain industries. Some of them prefer certain industries. Some of them are going to have minimum loan amounts of 500,000. Some of them will lend on the smaller scale of 300 and a little bit lower as well. Um, and so that's the problem, right? And so when you're
Mm-hmm.
working with me, what I do is I package the loan with you. I present it to my bank partner. They give it a one over, and they let me know, Sebastian, we like it. It looks good. Let's go ahead and get that client to, in an application in underwriting, and then I get you introduced, started in underwriting, and now you're with the bank, right? But if they don't like what they see, they're going to give me some positive or negative feedback, whatever the case is, so that we
Got
can
it.
discuss it. And maybe I can go back and say, okay, well, based on that, here's the rebuttal. And they may still say, no, we just don't like it. But I can take that information and move over to another bank. So
Yeah.
I work with over 15 banks. So I can't guarantee a loan. But,
Sure.
if in my assessment, I determine I think you have a chance, you,
That's
you know,
amazing.
I usually am able to get it funded.
It's phenomenal, man. Well, so let me ask you this. If somebody is like intrigued by this conversation and is really thinking about this in their life, how do you, I know you have all sorts of information and courses and like, just like ways to reach out and connect with you. What would be the next natural step for somebody who's like, I want to go deeper down this rabbit hole and learn from Sebastian. And obviously I would say go follow him. I'll put the link for his YouTube channel. He does all sorts of videos on this. So go check him out there. But like what websites, what courses, I'll put the links in the description below, but can you speak to maybe a couple different things that people can do to
So just if you
continue?
want to get general information on SBA yourself, outside
Okay.
of me, you can go to SBA.gov, and that's the
Okay.
government's website. Um,
Yep.
I've had a lot of people go to that website before meeting me, and then there's a like a bank find feature in there where you put your zip code, and then they try to connect you. And I've talked to a lot of people who said, "Well, I went through that website. They connected with me with these five different banks. I, you know, and I feel lost. I don't know what I'm doing, and they're all telling
Yeah.
me I don't qualify. After 5 minutes of talking to you, Sebastian, I feel like I have some direction. I know what I'm doing here. You know, so I'm not saying that doesn't work, but I do want to make that available to you. That's
Yeah.
free. You could just go do that. You can also utilize my services. I'll provide a link that you can put in the description. That
Yep.
you could schedule a consult with me, a free 15-minute consult. We could just talk
Cool.
about it. If you want to go ahead and just start working with me, then Chris is going to have a link that you can put that you could start an application. That application is not a loan application. It's going to be an application for me for my own internal assessment so that I can assess your credit without any inquiry or exposure, and then we can have a more high level conversation based on the assessment on whether or not you really qualify. Because on the interview, really all I'm going to do is tell you what I'm telling you now, which is I need you to
Mhm.
do the assessment. So
Yeah.
might as
Yeah.
well just get started there if you're serious about getting funding.
That's awesome. Well, phenomenal, man. I appreciate your time, and I think this is extremely valuable stuff, especially in the times that we're in and what people are looking for solutions for their business and for their life. So, guys, if you have any questions at all, comment in the comment section below. I will do my best to engage with every single comment. And if you have anything you need, feel free to reach out to me. You can email Chris at Life180. I'll put all of the links for you to connect with Sebastian down in the description below. So make sure to go check that out if you want to learn more. And hopefully you found this valuable, because I think this is some of the most important information that small businesses and entrepreneurs could be learning at this moment in time. So anyway, hope you found it valuable. Until next video, have a blessed, inspirational day. And we'll talk soon. See ya.